U.S. bond market braces for Trump trade of large tariffs and deficits. We're fading that headline. It simultaneously for us breaks three of our trading rules, and I'll lay them out. One is we always trade against the New York Times headlines. Welcome to RenMac Off Script, where we discuss markets, economics, policy, history, and life. It's the 25th of October, 2024. I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pallett.
As a reminder, all the charts that we reference are posted to our Twitter account and renmac.com. We're going to talk this week about the predict markets. I know the election. It's only 2 more weeks of this stuff, so that's good news. We're going to talk a little bit about the labor markets, housing, the seasonality in overall markets, the silver breakout. But Neil, I want to lead with you and talk a little bit about a headline from the New York Times this morning. U.S. bond market braces for the Trump trade of large tariffs and deficits. You want to hit on that a little bit? How do you feel? Forget the Trump stuff, right? Let's talk about just the kind of trajectory of where we are in the cycle and how you see that for yields.
I feel like it's using the wrong tense. Not braces, has been bracing for. Right?
Conjugation of word. My English teaching mother would be proud.
And so I think that's the first problem with it right there. And I think if you're going to have that conversation, you have to automatically recognize that at some level, the probability of a Trump victory is substantially higher than where we were 8 years ago, a couple of weeks before the election, right? So I think that's the first point. I think the second thing is what I'd say, a lot of it has to do with sort of sequence of events, right? I mean, so are tariffs inflationary? Yes, they are. But at the same time, if you pick and choose your spots, right? Like, let's say you increase, you want to put a tariff on a certain product. That means that people will have less money to spend elsewhere, which may, by extension, push the prices down for something else. So I don't know that it's a general increase in prices. It's a relative increase in prices. So I think that's something to keep in mind. And then the last thing I would say is, the markets appear to be pricing in some probability of a unified Republican government. That's what we're seeing in the political prediction markets, whether they are right or wrong. I mean, I would also argue that even, sort of polling averages, when you look at The Economist, New York Times, Nate Silver, I mean, they all have these races tightening up. So if you have a unified GOP sweep, I still think it's very challenging to kind of steamroll through a bunch of legislation that drives up the deficit, right? I mean, in a kind of way that people might be anticipating. So I think I think the best thing with a lot of this is just let's see what happens and not try to get in front of these outcomes. I guess that's what markets will do, but markets can change their mind very quickly, and we've seen that in the past. I mean, if you look at 2016, the conventional wisdom in 2016 was that Trump was bad for equity markets. And now the conventional wisdom appears to be that Trump is bad for fixed income markets. So I just think it's one of these things where it's best to wait for additional information before you pass final judgment.
Yeah, I would say it's probably true for both. You could scratch out Trump and put Kamala in there if you wanted to. But, I would say...
I could easily make a case for why Kamala would be good for equities, right? Because
Sure.
The likelihood would be that if she's president, the only thing I have any conviction on is that Republicans probably take the Senate. I mean, I think everything else, if you look at the polling, is just a pure toss-up. Yeah. So if she wins and the Republicans take the Senate, you have a divided government. It's going to be very difficult to sort of push through a massive deficit financed agenda. So the likelihood is that the deficit is somewhat narrower than whatever's embedded in the market right now. And interest rates come down, you have divided government, gridlock is good, that's good for stocks. You
Yeah.
can easily, I mean, there's all these different scenarios. I mean, I just think it's worth waiting, assessing, and then investing.
So U.S. bond market braces for Trump trade of large tariffs and deficits. We're fading that headline. It simultaneously for us breaks three of our trading rules, and I'll lay them out. One is we always trade against the New York Times headlines. And for that matter, not just picking on the New York Times and Time Magazine cover stories. They have a tendency to get to the news too late, particularly for markets. When the markets, by the time they're writing headlines, the markets have probably discounted at least 80% of what the problem is. The second is never trade a bearish political expectations argument. It's too fraught with emotion. I mean, we have a policy uncertainty index that we use. It has a statistically significant negative T-stat. What does that mean? It means the more policy uncertainty is, the better the market's outcome. And it's statistically significant. So, when people get all worked up about it, and I understand it's very emotional, there's a lot of fear mongering, etc. But it actually tends to work against you chasing that versus for you. So be very careful of that. And then finally, our third rule, and this is at any point in time, we don't chase overbought conditions in downtrends. And that's exactly where yields are today. So, as we look at this thing violates three of our trading rules, and we're willing to take the other side of that. So, hashtag helped put three kids through college. So, now to you, Steve Pavlik. I mean, we've put this off as long as we possibly can. Where are we on the polls? Let's talk about the polls and what it's looking like. And then let's talk a little bit about the free market and betting markets and what the implications are there. So talk to us a little bit about the polls. Where are we today? How does this race look?
Well, sure. As Neil mentioned, polls have tightened, but I think that you can think about that directionally. They're tightened from a position where Harris had been largely ahead and Democrats have been performing better. So the movement as of late, being defined as the last week or two in particular, has been in the direction of Trump and Republicans. So where we are today as of Friday morning, October 25th, is Trump is now tied in the Real Clear Politics national average of polls. He is ahead in the battleground state polls by 0.9%. And if you go down to each of the 7 battleground states, according to the Real Clear Politics average of the polls, he's ahead, albeit within the margin of error in every single one. So you'd rather be in that position. Again, I think we mentioned this before, just reiterate, the polls were off at the state level by about 4% in 2020 and 2016, all undercounting support for Trump. So my sense when we start looking at things like the betting markets and even sort of Republican enthusiasm right now, I think they're sort of anticipating that polls will be off by a similar direction and amount again. We won't know that until November 6th, day after the election. So that's sort of the state of the race right now.
Maybe.
What do you say to the people that say the real clear politics average is biased because it sort of includes a lot of Republican leaning pollsters that skew the averages in the direction of Trump?
I would say look at the 538 average because it's not really any different. I mean, maybe slightly at some of the margins, but the directional change is all there too. There was even a 538 analysis that basically you said if you remove all the quote unquote political bias polls that basically reach the same conclusion. I think everybody sort of again sees this late momentum and direction in favor of Trump and Republicans. And I think going back to just where you had Democratic leads at this point, 16 and 20, and just how the race was obviously different in 16, and Biden's margin of victory and Democrats' margin of victory in 2020 was much more narrow than anticipated. I think that's sort of the fear amongst Democrats.
So one of the things I would just say about the betting markets, keep this in mind. Let's take the election out of it, and let's say that the betting markets for the election represent two paths for General Electric, right? And each one is a price. So right now, one path has General Electric priced at $59. The other path has General Electric priced at $40, right? Let's say that the true price, if there was to be known such a thing, that your analysis shows that General Electric should be $50, right? Right in the middle. What that implies is that sophisticated investors not in love with GE or GE employees, or maybe, counterfactual to that, 3M employees or somebody that's a competitor to GE. If 50 is the right number, then they should be selling 59 or 60, right? Because it's too high. And they should be buying 40 because it offers value and it's too low. And the free market, again, without bias, will start to tighten that spread into the true market. So the idea that when we can use names, right? Let's say Fidelity steps in and overpays for GE and pushes the price up to 59 or 60. Well, guess what? Citadel is going to come in on the other side and short GE because they know that the true value is 50. That's exactly the way these betting markets work. So there's a lot of crying, a lot of moaning, a lot of bitching, frankly, that these are biased, and it's biased in the direction of one or two people that are driving this. That's fine. But if they're sloppy buyers, that actually presents a ton of opportunity on the other side to profit from it. So that's what people are missing. That's what the Wall Street Journal article missed. I get the liquidity. I get that it's, it's not accessible to U.S. citizens. That's fine. I'm sure you can find a way around that, by the way. But the point being that the free markets are really the embodiment of all the information that's out there. And if there really is an opportunity, check your emotions at the door and make some money. That's the way it goes. Look, let's take it to the other extreme. If Trump was at 90 and Kamala Harris was at 10, guess what I'd be doing? I'd be calling my uncle who lives in London and telling him to put $10,000 on Kamala Harris because she represents an opportunity, right? She might not have even a 50-50.
The value stock. Yeah.
Yes, absolutely. So, check it at the door. Prediction markets are interesting. They're not always right. I mean, 59, 60% does not mean that it's a slam dunk, but there is some value there if in fact it's a 50-50. Now, the question is it really 55% of Trump winning probability, the true probability, if it was known, and the betting markets are at 60? And if that's the case, is that enough juice to actually profit from it? Probably not, right? That probably doesn't make enough sense. So that's our take. It's not in defense, by the way, of Trump. It's not in defense of Kamala. It's in defense of free markets and the ability of free markets to give us useful information and
Price
for us
discovery.
to use that information in our or to our advantage.
Price discovery.
Yes, thank you, Neil.
Well, it is worth noting that the forecasters, both The Economist now has Trump odds at 53%, with Harris at 47, and even 538 now gives Trump a higher odds of winning at 51%, Harris 49. Granted, very close, but they both had Harris favored to win up until, I believe, last week. So again, they may see some betting market movement on that, but these are people that are supposed to take out the biases and factor in other factors, and that's what these forecasters are saying. And neither one would be considered a right-wing outlet, to put it politely.
All right, let's move on beyond this. I've already hit the snooze button twice on this. Labor markets, Neil. Anything to note in the last data points?
Well, we have a jobs number coming up next week, so I think that'll be
a big one, right? I mean, right before the election, that's got to be important.
Well, I mean, it depends. If it's very strong, it'll be important. If it's very weak, it'll be important. If it's sort of at consensus, maybe not. But obviously, keep in mind that next jobs number has a lot of potential special factors in it. How many people are back on the job after hurricanes? How much is the Boeing strike going to weigh on manufacturing employment beyond Boeing? So I think, it's going to be an interesting one. Consensus right now, I think, is around 120,000 or so. I mean, we'll have to see how those change over the weekend. But, right now it looks like consensus is 120 with 100,000 on payrolls. Governor Waller said that his sort of early estimate in terms of how much all these special factors would weigh on employment was around 100,000. So that kind of gives you a sense for where the real number might be. There's a couple of things I think that are worth mentioning. I mean, number one, initial claims have been stabilizing of late. They haven't fully unwound their kind of hurricane effects, but they're moving in the right direction. That is yet to filter into continuing claims. I do think the bigger story is that, continuing claims are still rising about 3 to 4% a year. And that just means that you have this kind of slow leaking higher of unemployment or sort of residual labor slack. And, that kind of, I think, is a reminder that, it's getting more difficult for people to find jobs, recruiting intensity is low. And, I think ultimately that becomes a problem. So that's what we're looking at. Some of the high frequency data points, I mean, Indeed, it, puts out data on job postings. That's generally been coming in weaker of late. So what I look at, you either believe like September represents the start of some kind of new trend where employment growth is kind of kicked into a higher gear, or you think the trend is probably closer to where we were before that September report. And I tend to think it's the latter. So that's sort of how I'm thinking about things at the moment. There's nothing really in the data that leads me to believe that employment growth is kind of kicking into a higher gear at the moment.
So does that make us vulnerable to a downward revision that again would be more noisy than not, just because the other one was the
Well,
September?
that's a great point. I mean, keep in mind that the initial response rate to the September jobs number was very low. I mean, it was only about 60%. Now, that doesn't tell you about the direction the revision will be. It just tells you that it's a high likelihood that you get meaningful revisions as more surveys come in. So what we know about revisions, at least up until the last number, was that they've generally been to the downside. We mentioned earlier that August is usually revised up. So, there's a chance that you get a downward revision to the September data, which might take a little bit of the shine off of that report. So in other words, labor markets weren't as strong as we thought going in.
So this week, Kevin Warsh kind of walked back the 50 basis points, wondering, I can see it in your eye. All right. I mean, talk about this is the way that you put enthusiasm and emotion into an economist. So he walked back the 50 basis points from the Fed, kind of questioning why they did it, or if they needed to do it. What's your take on that?
Well, I would tell him to consult his Hoover Institution colleague, John Taylor, and ask him what a Taylor rule shows. Look, I mean, one thing you know about Kevin Warsh is that if he ever disagrees with the Fed, it's always in the same direction, which I think speaks to a lack of imagination on his part and an inability to think outside the box. I mean, one of the problems that I have with economists, particularly academic economists, is that in many cases, they're a lot like, and I don't think Kevin Warsh is actually a formally trained economist, but be that as it may, one of the things I hate is in so many cases these days, you can pick a topic and determine what that economist will say about topic X, Y, or Z just based on who they are.
Yeah, they've got a bias. Yeah, no doubt.
In the same way that you can, like, is anyone really surprised by how Clarence Thomas rules on an issue anymore? Right. Or Justice Sotomayor?
Yeah.
It's the same thing with economists. It doesn't surprise me. So when Kevin Warsh disagrees with the Fed coming at it from a hawkish perspective, it doesn't surprise me. Now, looking at a specific criticism, it doesn't make any sense because at the time of the September meeting, what we knew about unemployment was that it was generally going up. In fact, unemployment at the time of their meeting was higher than the June SEP, right? And in June, the Fed thought the unemployment rate wouldn't get any higher than 4%. It was already at 4.2% at the time they met, and the trend was higher. And core inflation was slowing, right? It was coming in below 2% annualized sequentially for, 3 of the last 4 months at that point. So, like I said, go ask John Taylor across the hall at the Hoover Institution what the Taylor rule says about where the Fed funds rate should be. And then, look,
Speaking of predictability, what I'm
posturing, and it's always in the same direction. Can someone please find me a time when Kevin Warsh disagreed with the Fed because he thought that they weren't dovish enough? This is a guy that thought there was upside risk to inflation after Lehman failed. For Christ's sake. It's, give me a break. The whole thing is just a joke. Look, I think this is like very serious stuff because his name is being thrown in the race for potentially like Fed chair. And I think it would be a bad decision. Not that I have any kind of say in the matter. I don't traffic in those circles. It would be a bad decision from a number of perspectives. Number one, he's always hawkish. And generally speaking, that just, to me, you have to be flexible in the way you think if you're a policymaker. Number two, I think if he went in, he would probably get eggs thrown at his office every other day from the Fed staff. Because the only thing that guy has done since he's left the Fed is take a huge on everything the Fed has done, over the last 10, 12 years. I mean, how is that endearing you to your colleagues? I mean, you work there for several years, then you leave, and all you want to do is crap on them and sort of relitigate every decision they've made. So I think it would be there are plenty of better people to take the job in 2026 when Powell's 10 years up.
End of story. I've always said, the most real world decisions that academic economists have to make is whether they're going to wear a sweater or an elbow patch jacket that day. That's about it. Like, that's the kind of the extent of the decision making that they have that has real life implications. And that's why we have you, because you're a sweatshirt guy.
I can be a suit guy too.
Yeah, no doubt about that. No doubt about that. So from a market perspective, I think the real thing this week, we can say this once a year, is that you have very, very strong seasonality from this point forward. If you look at 3-month returns historically, forward returns, that is, it's as good as they get for the S&P this week. It's as good as they get for cyclicals this week. It's almost as good as it gets for gold this week. I think that was actually on Monday. It might have been last Friday. And interestingly enough, it's very good for volatility. Not as much beta. It's easy to confuse those two. Beta is volatility with direction to the market. Volatility is just basically standard deviation around mean. So high volatility names, regardless of what the market is doing, tends to do well. What's on the downside? Energy. Energy tends to do poorly here from a seasonal perspective. And last week, or I should say this week, we actually did see silver break out finally from this big base formation, which I think certainly is bullish. We are looking at cyclicals versus defensives for the remainder of the year. Again, part of that being the seasonal trade, part of that being the overbought condition from yields, part of that being the overbought condition that we're getting in the dollar, and looking at these names to perform better as we go through the end of the year. Now, one of the hangups for us, and it's an inconsistency, and frankly, it's unresolvable, and this stuff happens in the markets. It can't, we're not carpenters. We don't go around with levels and squares making everything fit correctly. Sometimes there are just unknowns. And one of those here is that we continue to see weakness in semiconductors, basically outside of NVIDIA, where there is this kind of persistent decay in relative performance. So the correlation between semiconductors and cyclicals, X semiconductors, is very high historically. So as much as we like cyclicals, we still are challenged by the charts and the relative performance of semis. So that's going to be one that probably resolves itself. I'm just not sure which way it is. Either we're going to be wrong on the cyclical call and semis are telling us that, or semis will probably stabilize and improve with the movement in cyclicals. Yanks or Dodgers, Neil?
What do you think?
Yeah, Dodgers. You look like a Dodger guy.
What?
Pavlik?
Obviously, we're rooting for the New York Yankees.
Yes, sorry.
It's crazy. It's been 15 years. I mean, it was when I was a teenager, they were winning with such regular occurrence. And anyway, so
yeah, I remember passing up tickets because I'm like, well, just another World Series game.
I mean, it's going for. I mean, we looked it up. I mean, you can't even. I mean, 400 levels, I think, are like $1,500.
Yeah, yeah.
So
you want to be in the bleachers anyway.
You're not paying me enough for that, so.
My wife's a New Yorker, so that's who we're pulling for.
Oh,
and I guess just a couple things on the policy side, just to look out for next week with respect to the election. I would watch. Now we're starting to get a lot of mail-in early vote. The early vote numbers are starting to come in. Historically, they tend to be disproportionately for Democrats. I suspect that's still going to be the case, but what we're starting to see now is a lot of reports that Republican are starting to eat into that margin a bit. Republicans voting earlier, despite Trump's mixed messaging there, and that could be an important tell. You know, we won't know again until after the election, but any erosion there of Democrats' support could be important to keep an eye on, particularly in these battleground states. Bloomberg report again today showing that Republicans much larger percentage than they had been in the past. The thing to keep an eye on too is just, you know, closing message for both Harris and Trump. I mean, Harris has sort of shifted away from the joy is gone, and now it's really, I think, focused more about trying to maybe get her base motivated to vote against Trump. Trump, I think it's a little more targeted messaging for each state. You have sort of these policy positions where no tax on tips meant to appeal to Nevada, no tax on auto loans in terms of or interest deductibility there, play for Michigan, increased fracking, Pennsylvania, and obviously immigration for Arizona. So
didn't he float an idea of no tax on for cops and firefighters too?
Yeah, that's out there now. Yeah.
I mean,
I
I
think
mean, I mean, I don't like to sort of virtue signal about policy preferences that come out of either candidate's mouth, but this would also be a very bad idea because you shouldn't be picking and choosing what jobs are good and what jobs are bad if you're the government. You should be trying
correct.
to.
my sense is that this is political pandering.
No, I know. I'm just
This is
saying it's
all-
not good. In the same way that it's not good when certain candidates make unconstitutional sort of pledges to give forgivable loans if based on your ethnicity and race. But I mean, I just, you know, you want to try to play both sides here. So it's not good when one side does it. It's not good when another side does it. You shouldn't try to pick and choose.
Pick and choose.
Winners.
Totally 100% on that. Yeah. Just, yeah, it's, you know, it's blatant, it's obvious, it's shameful, and it's a
Politicians pander.
business. Yes, indeed.
But you only light your hair on fire when one side does it.
Well, right. Well, as they said, there's a famous quote, right? We know they are lying. They know they are lying. They know that we know they are lying. We know that they know that we know they are lying, and still they continue to lie. So I think that's a great way to wrap it up. Join us again next week. We'll be 1 week older, 1 week wiser. Remember, the markets are complex, but good analysis doesn't have to be. We will be here next week, the final one before the election. But until then, I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pavlik.
We'll see you.